All right, hello my friends, and welcome back to another video here on Rebel Trading. In today's video, I got a trading strategy hosted on the 1 hour time frame. The strategy also includes buy sell alert, so you know when to get into certain trades just based off of those alerts alone. On top of that, this entire strategy involves just one single indicator. So it is simple, basic, and most importantly, it's profitable. Be sure to stick around to the very end of the video because I'm going to show you how to set up trading alerts using this strategy as well. So the first thing we're going to do, we're going to go up here and we're going to make sure that the Heikin-Ashi candles are activated. For those of you who are not comfortable with using Heikin-Ashi candles, there is an indicator that you can use that replaces the Heikin-Ashi candles as an indicator. But just for today, we're going to be using the Heikin-Ashi candles just to keep things simple. So we're going to go up to indicators. The indicator that we're going to be using is called Trendline with Breaks. Can be the one by Lux Algo. So after we've got it loaded up, we're going to go to settings. All right, the first value, we're going to change it to 24. And for the slope, we're going to change this to 1.6. And that is literally all you need to do for this strategy. So before we get into today's strategy, I'd greatly appreciate it if you guys would smash the like button if you're enjoying today's video so far. It's really helping me grow here on YouTube. Once I hit my goal of hitting 1,000 subscribers, I'm going to be hosting my free Telegram trading channel where I show you all the trades I make on a regular basis. So basically how this works is the indicator identifies breakouts. So for example, whenever you have something that breaks out to the downside past this red line and the bar closes, this indicates that you have a sell position. So basically how this strategy works is it identifies breakouts. So for example, you can see up here, if it breaks out to the upside and the candle closes above this level, you'll be getting a buy position. So after this occurs, we're going to take our long position, right? So we're going to set the stop loss a few points down below the most recent swing low position. The risk reward ratio, I usually stick between a 1 to 1.5. So normally what I do is I take my first profit target or part of the position at the 1 risk reward ratio, and the remainder is going to be at the 1.5. After I take my first take profit, I move the stop loss up to the entry price to prevent the trade from losing. As you can see, this trade took quite some time, but we did hit our first profit target. Seeing as how this trading strategy is on the 1 hour, it's more of an intraday and swing trading strategy. I also use this example on the US dollar Japanese yen pair because most of the assets that trade against the Japanese yen tend to trend for a while. So that really helps with certain types of breakout strategies or strategies that require you to wait longer for a trade to occur. Also, what I'd like to do here is switch back to the regular candles. So you can see here, even with the regular candles activated, you can see that the entry point for the price still ends up being profitable. Like I said, the Heikin-Ashi candles do not reflect the actual legitimate price action, but it is useful as far as an indicator would be concerned to identify where the trend in the strategy is going. All right, let's look for another long position. We can see right here, the price action did break out and close above this level. So we're going to open our long position right here. Set the stop loss a few points down below the swing low. If you're not comfortable with setting the stop loss down by the swing low because the price action is too high, what you can do instead is set it a few points below this red line right here. And we've got another profitable long trade right here. Again, take partial profits on the way up and move your stop loss up closer to your entry point, or at least below this red line right here. This is going to ensure that long term, you'll be able to survive using capital preservation. What matters in trading is not the profits that you make, but the losses that you can avoid losing as much as possible. And again, if we go back to the regular candles, we can see here that it did indeed hit our price target. We never know where price action is going to go. So again, move your stop loss up and we can avoid losing most of the trades. So as we can see right here for a short position, we do have a breakout to the downside. The candle did close below this line and we do have a sell signal appearing. However, on the candle where the bar closed, we have really long wicks on the doji candles. This represents high volatility in the price action. So I would encourage you to stay away from these types of trades because this is going to increase the odds of losing. All right, so for our first short position, we can see right here, price action went just at the peak of the apex. These are the ideal types of trades that you want to be looking for. If the lines match up accordingly and you can see a breakout from the triangle pattern to the downside and the price action closes, this is an ideal trade. So we're going to take our short position right here. stop loss a few points above the swing high position. And you can see on this short trade, we blew right past the 1.5 risk reward ratio. Again, if we go to see the regular candles, we can see that the price action did indeed hit the price target that we were looking for in the strategy. So as far as setting up trading alerts using this strategy, it's quite simple. We're going to just go up here to our indicator, click on more. We're going to click add alert. First thing we're going to do is we're going to click on once per bar close. We'll set up 2 trading alerts, one for downtrend breakout and one for upward breakout. That way, whenever one of these alerts appears, you're going to get notified on whichever device you have connected to TradingView. So for example, I usually have this connected to my phone. So whenever I go, I can see alerts popping up and I know when to take a trade. Just be sure that when you do get these alerts, that if there is a breakout either to the downside, a full candle has to close below or above for a long in order to take the trade. I typically risk no more than 2 to 3% on these types of trades. If you're not comfortable with the amount of profit that you would be making in your current trading account, what you could consider instead is taking a trading firm challenge. I'm currently taking a trading challenge using my own capital where I will document and put it here on YouTube for you to see. If you'd like to see the video, go ahead and click down below. Trade good, trade smart, and I'll see you on the next video.